Hey Bowtie Nation, Joseph Hogue here, looking through all the short-term noise in the market to the biggest trend in investing, a trend that will make millionaires. Investors have been whipsawed this year with stocks like Nvidia plunging 38% in 3 months, then to surge 22%, and all on factors impossible to forecast. Investing this year has been like chaperoning a middle school dance with a mosh pit. But I found one trend that will make millionaires, one that doesn't depend on tariffs, earnings, or what happens in the next few months. This trend is unstoppable, and the stocks in it will make you rich. That's because agentic AI, business use of artificial intelligence, is going to be what e-commerce was to Amazon, sending the shares up from a split-adjusted 58 cents each to over $240 in just over 2 decades. That is a 41,724% return, 417 times your money, meaning just $2,400 invested would have made you a millionaire. By now, every investor has heard the hype and the hope for AI stocks, but few really grasp the size and the speed this change is happening. Agentic AI is an AI system that doesn't just follow instructions, but makes decisions, learns, and acts independently. Like a personal assistant who doesn't just take notes, book flights, and respond to emails, but also fires your ass when you're no longer needed. Amazon itself has said that the use of AI will reinvent every customer experience, with more than 1,000 AI applications now in development across shopping, coding, advertising, and more. Even more telling though, and a sign of things to come, e-commerce leader Shopify has instituted a new rule of no new hires unless AI cannot do the job. Think about that. Teams at the company are integrating AI into every part of their workflow, and for every task or job needed, the company will only hire for that if AI cannot do the job. We've already seen how AI helped Klarna cut marketing costs by 25%, saving more than $10 million just in its first year of use. And while every CEO wants to say artificial intelligence is only going to create more jobs, here with Shopify, we have a company coming right out and saying it. If AI can do the job, a human will not. Folks, agentic AI is the business version of Iron Man, but without the alcoholism and with more layoffs. The agentic AI tools market at just $6.2 billion last year is forecast to grow to over $420 billion by 2030, growth of 52% a year. And frankly, I think even that is underestimated as AI continues to develop and can do more jobs. But not all agentic AI stocks are going to make millionaires. For every Amazon and its 41,000% return, there will be a dozen Pets.com that will fail and take your money with them. That's why I'm putting my money on those with the power of Nvidia behind them, Nvidia's partnerships in agentic AI. I dug into the press releases, news, and Nvidia's own 13F disclosures to find the agentic AI stocks Nvidia is helping to succeed. I'll highlight 5 of those stocks to buy, plus 2 others going it alone. But nation, this goes way beyond just getting a return on your money. We're talking about protecting your financial future from collapse, because once this trend really gets going, no job is going to be safe. Let me rephrase that new mandate at Shopify for you. If AI can do your job, you won't be. That means any job in any industry. And just because AI doesn't know how to do it yet, like the 4 in 10 jobs with little or no threat from automation, AI is a learning machine by definition, and companies watching the bottom line for profits will figure it out. All this means is I'm investing in agentic stocks, so when the robots do take my job, I'll have enough FU money that you're going to have to let me know about it on my private island. I'll show you how to find these and analyze agentic stocks later, but let's get started with one of the largest, $169 billion ServiceNow, ticker NOW. The company's agentic AI solutions, its AI Agent Studio and Orchestrator, help businesses deploy and coordinate agents from onboarding employees to resolving IT issues. And few other companies out there offer this kind of holistic use case. Pre-built and customizable agents make the product accessible to any company, and a unified platform seamlessly integrates the AI agents across departments. That helps give ServiceNow a competitive advantage in those hesitant companies that are not yet sure about agentic AI. And since mid-March, the company's partnership with Nvidia is propelling that leadership through integrations with Nvidia's AI enterprise software, including its NeMo framework and NIM microservices. The collaboration enhances productivity across some of the biggest industries for AI, including cybersecurity and telecom. And I'm going to show you later how to analyze these stocks, with a key point here in growth of those enterprise clients. And signing up those large clients of over $1 million or more in sales is where ServiceNow has the advantage, growing large customer relationships by 30% over the past 2 years. On forecast for 2025 sales of $13 billion, almost 19% growth from last year, and a 17 times price to sales multiple, the stock is worth at least $1,100 a share. And here, a legacy tech player is grabbing a lot of headlines lately. Oracle Corporation, ticker ORCL, is the largest on our list at $368 billion market cap. Oracle is a little later to the game here than these newer companies, but has its financial scale and implied trust as a legacy tech giant. Its agentic studio offers blueprints for no-code deployment of AI workloads, acceleration of vector search in Oracle's database, and more than 50 pre-packaged Oracle Fusion application AI agents. Oracle's partnership with Nvidia also integrates the company's enterprise software, including over 160 AI tools and 100 plus NIM microservices. Now, this one may not have the growth or the innovation that we see in some of those other agentic stocks. Hell, it's harder to turn a $368 billion company, but Oracle's existing relationship with thousands of companies over 48 years means it could scale the business super fast and surprise to the upside. Growth of just 7.8% this year to $57 billion is expected to pop higher to 14% next year as that agentic wave really gets going, making Oracle one of the least expensive on our list at just 6.9 times on a price-to-sales basis, and even cheaper on those forecasted sales. We're just getting started with our agentic stocks to buy, but finding these Nvidia partnerships means keeping up to date with the news. And for that, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to know. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for the sign-up link below. Back to our list with design and verification company Cadence Design Systems, ticker CDNS. Cadence started with solutions to design and verify systems and semiconductors, but has expanded rapidly into agentic AI, using its tools to automate decision-making and accelerate chip design. Cadence has long had a working relationship with Nvidia, but expanded that partnership in March to integrate agentic AI, leveraging Nvidia's Blackwell architecture and accelerating the Cadence Spectre X simulator by up to 10 times. Within the partnership, Cadence was also able to run a multi-billion cell simulation on Nvidia GB200 GPUs in under 24 hours, something that would have taken a top 500 CPU cluster days to complete. It is an impressive start, but on just 11% forecasted growth to $5.2 billion in sales this year, to already trading at 15 times on a price-to-sales basis, it's relatively more expensive than others on the list, so this one I'm putting on my watch list to see how that partnership develops. Now though to one of my favorite stocks in my favorite theme, Crowdstrike Holdings, ticker CRWD. The company's Falcon platform is already the best available for enterprise cybersecurity, driving a 27% annual growth in recurring revenue. And now, its generative AI assistant Charlotte is saving weeks worth of detection time, providing faster answers to real-time threats. And part of this success is through its partnership with Nvidia announced in March. With Nvidia's NIM microservices, Crowdstrike's Charlotte was able to double its detection speed, and with 50% less compute resources, making it a huge step in efficiency. And nation, I know you're tired of hearing me talk about cybersecurity, but this is a $250 billion market, and here we've got a leader growing at 20% annually to $4.8 billion in sales just this year. Cybersecurity stocks haven't sold off much this year, so the valuation is still high at 23 times price to sales. But this one is going to keep on growing, and is one of the largest holdings in my portfolio. We've still got 3 more AI stocks to highlight, including my favorite of the group, one I own more than 11,000 shares, worth almost $90,000 in 2 accounts. But nowhere is it more important to do your research than in this agentic theme. Nation, we're already seeing a replay of the dot-com scam companies pulled at the end of the 90s. I remember it intensely because I just started investing while in the Marine Corps. Every company with a .com in its name was seeing a boom in its stock price, so companies were just starting to change their names. And the same thing is happening right now with AI in name changes and mentions. A record 199 companies in the S&P 500 mentioned AI just in their Q1 earnings last year. That number is even higher in startups and small caps. We're starting to see those scams with some that aren't even remotely AI, like one company claiming to be the first regulated AI financial advisor, but with only the puny humans behind the scenes. Other companies are using people to do the work they say is done by AI. And I can imagine that call. Sure, I'm a robot. Beep, bop, boop, up. Folks, you have got to do your research on these companies, so I want to show you where to find the AI stocks and a few key points on how to analyze them to make sure you're only buying the best. And for finding the stocks to start your research, one easy way is to start with a list of the largest AI-focused exchange-traded funds, ETFs, holding the stocks. Then on the website for each, look for either portfolio or holdings in the menu and find the entire list of stocks in the fund, an easy way to reverse engineer your stock research. And from there, you can research each company with the points I'll outline next. Another way to find these stocks, the way we're using here, is to mine those partner networks supporting the agentic stocks. I'm focusing on Nvidia here because the chipmaker has that lead in AI development, But Microsoft, OpenAI, Amazon, and Alphabet all have divisions tasked to partner with AI developers that you can research for your publicly traded stocks. And of course, in a perverse twist worthy of any Asimov story, you can also ask GPT or another AI model to help you start your research. More than simply asking which publicly traded stocks are involved in agentic AI, make sure you ask for citations that you can double check. Researching each stock, you want to check on 3 key factors. First is the company's growth in enterprise clients and especially conversions of its pilot programs. You not only want to see that a company is finding businesses to use its agentic software, but that customers are sticking around after a test or a pilot program. Second, looking in the company's presentations or in other research, you're looking for what's called the total addressable market, or the TAM, and comparing that with the company's current revenue. Very few companies grow to control even more than 5% of their total market, so you want to make sure that that TAM is large enough that even a 3 or a 4% share would be strong growth from where the company is at now, that it's worth the risk here. For example, voice assistant Soundhound AI has grown revenue at a very strong 57% annual rate over the last 3 years, exactly the kind of growth stock that we'd like to see, and at $84 million in sales, it still has a huge runway for growth in its $160 billion market. Even a 3% market share here would be $4.8 billion in sales, or 57 times its current revenue. And third here, you're looking for those agentic companies that have that proprietary data, which have the kind of killer app software that isn't easily copied by others. Folks, this is a big part of the process I used as a venture capital analyst, researching the trends and the growth in those pre-IPO companies for the next 10x investment. And there's one more rule here from my venture cap past that you're going to want to follow. Even with the research, you can rarely be certain of which of those venture investments are going to be the next Amazon and which are the next Pets.com. More than a third of VC investments fail, but put together a portfolio of 10 or more and you're getting at least a few of those 10 and even 30x winners. The stocks in this video are all billion-dollar companies, and with research, you don't have to worry about those total failures, but it still pays to invest across at least 3 to 5 agentic names, building that portfolio that's going to ride the entire theme higher. Shares of Accenture, ticker ACN, have plunged as cuts to government contracts are announced, but the consulting giant is leaning hard into AI, and like Oracle, has the scale and the existing relationships to grow. The company booked $1.4 billion in new bookings within its generative AI solutions in the second quarter alone, and $21 billion in total new bookings for the quarter. And here, the partnership with Nvidia has been longer than the others, reported last October, with Accenture training over 30,000 professionals to help their clients reinvent their processes and scale that enterprise AI adoption. And this one is slower growth at just 5.8% this year, and a revenue of $68 billion. It's going to take a while for that AI segment to meaningfully contribute to that growth, but at just 2.7 times on a price-to-sales basis, it is the least expensive on our list and worth a look on this year's sell-off. One of the smallest companies on the list, and one most focused on that agentic future, UiPath, ticker PATH. While UiPath doesn't have an agentic partnership with Nvidia, it's still one of my favorite stocks in the theme as a leader in that process automation, targeting a chunk of the $60 billion addressable market. While growth has slowed, it still produced a 19% annual growth in recurring revenue, with strong customer momentum scaling large customers by more than 10% over the last year. UiPath is a pure play in this agentic AI theme, with its orchestration with specialized agents for enterprise pricing optimization and inventory management. This one does take a leap of faith though, as growth has slowed to only 6% this year, but a strong argument for value at just 4.2 times on that price-to-sales valuation. If UiPath can grab a share in that agentic market, it will see this stock boom higher. This next stock isn't on the list of Nvidia favorites anymore, but is still my favorite for top agentic stock to buy in that long-term AI story that's going to make millions over the next decade. As we've all been reminded over the last month though, that short-term can break you as an investor, so make sure you watch the video linked here in the corner next, why the next 42 days is going to be critical to investing and exactly how to invest. And my top pick for agentic AI is one we've been following for more than a year, Soundhound AI, ticker SOUN. At one point, Nvidia held an $8 million position in the company, and while it's sold those shares since, the two companies are still collaborating through Soundhound's chat AI automotive systems using LLM capabilities in the Nvidia Drive AGX platform. So this isn't a direct partnership like we've seen with the others on the list, but Soundhound is the stock to own in agentic voice assistants. I've been buying since February last year, starting around $4 price, and while the shares have come down from that frantic run to $25 each, it's still up over 200% and with much more to go. The company is a leader in conversational AI to businesses that can be used to build an AI assistants in 25 languages, a market it estimates as large as $160 billion. The shares popped 50% on a single day last July when it was reported the company's voice assistant would be used across Alfa Romeo and Citroën vehicles in Europe. It's also being used in Apivia call centers, where it's been found to produce a 20% increase in productivity. Sales are expected to double this year to $161 million before slowing to a 22% pace next year. But I think they continue much faster growth as they develop that call-to-order and drive-through market. This is still a very small company at just $3.4 billion market cap, but one of my favorites in the agentic AI space. Get the weekly bow tie free with the link in the description and stay up to date with all the news, strategies, and market trends you need to see. Or click to the video to the right to see how the next 42 days could make you a millionaire and the 7 stocks that are going to do it. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.